Good morning, everybody. It's Monday, May 5th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn down 3.5 at 465.5. July soybeans were down 4 1/4 at 1053 3/4. And July Chicago wheat was down 3 1/4 at 539 3/4. No export sales announcements here this morning. So I guess just a couple of things to kick us off this week. It looks like the next 12 to 14 days, we're going to have a pretty good open window for planting. So we should see quite a bit of continued progress there across the Corn Belt. Chinese markets are closed this week for holiday. So I know it's seems like it's been closed anyway with everything that's going on, but yeah, they'll have no markets. And there's been chatter that we could have, some more announcements, possible trade deals being discussed further this week. So we'll have to keep an eye there as well. So with that, guys, we'll kick off another week here. Dustin, maybe give us a few thoughts as we start the week, and then we'll throw around the room.
Thanks, Dan. Just looking for, just export inspections and confirmations of those. We have July beast corn down to the lowest in over a month. We're down to 17 over, which is still a pretty sizable inversion, but it has been slipping the last couple of days. So, at the end of the day, as summer needs are being bought up, and Brazil seems to be coming online with the second season crop. By that point in time, they've had at least decent weather through their pollination window. What will that old crop premium be like compared to new crop? Are we capable of going back into a carried market there? That's a big question. I think, we've had tremendous export demand, and there's some of these trade deals that are on the table, but they might not be, as fast as we'd like them to be. We don't expect, for example, Japan or India to start taking old crop U.S. corn, en masse. So if we are looking at a 1.4, 1.5 carryout, and that's still pretty tight, but buyers are kind of satisfied. There's not a lot of demand rationing. I think we are capable still of seeing the carry market there.
Very good, Justin. What's on your mind as we start the week here?
Yeah, to Dustin's point, I mean, you look at corn spreads like July SEP, got to 42 inversion, which is historically very high. So, that point, you when you start seeing, the safrinha crop, get rains and looks like it's going to be a good crop, you're starting to get planted here, even if you're tight in the end, which I think we will be. You're still going to have enough, right? So you start looking at that new crop supply, and it's a 40-cent discount or more, right? The markets, those inversions go away. So you pick at the tightest years we've had, outside of maybe 1996, where the inversion stayed the whole time. Those tend to go away as you get closer to new crop supply, right? Just natural buyers kind of are willing to sit on their hands and wait. To get more supplies, or people have gotten enough, enough coverage, all sorts of reasons. But, I just think there's too much unknowns still to be super bullish. You've seen open interest come down. We talked about this all last week. There's just nothing exciting right now, right? There's no, if you're a money manager, fund manager, to go put a bunch of money in corn or soybeans, it's just not an exciting story, right? Until you know more. So I think it's more of these people getting on the sidelines, and it's a choppy market still. All these things we talked about for weeks, right? You're kind of stuck where you've got crop insurance and government programs on the downside, and on the upside, I think there's plenty of people that want to sell it, if we get back above the highs that we had a couple weeks ago. So I think it's kind of just a wait and see type attitude, and which is pretty boring and hard to talk about every day, to be honest with you.
Yeah, no doubt. Well, we've seen, one thing I was looking at this morning, like corn, you've always talked about, we broke into competition and we broke into business, right? And it was doing an efficient job. Well, you look at wheat, and you're starting to become competitive on an export market for wheat. So it'll be interesting to see if we see sales pick up or start doing business there and maybe get some life in that market?
Yeah, for sure. Wheat's a tough one. It seems like we just never can get the business, and to keep making contract lows. I mean, wheat's cheap by any metric that you look at historically, whether it's the dollar versus gold versus other commodities. I think also part of the problem with corn spreads is that, you're feeding wheat in areas around the world because it is so cheap to corn. And you're probably feeding some wheat in this country. It's not quite to the level yet where it's like switching over for 6 months at a time, but it's certainly fitting into feed rations or formulas in many parts of the world. Yeah, wheat's a really tough one. I mean, because with dollar weakness, wheat should be the most reactive to that. It should be competitive, right? We should be seeing announcements. We just aren't. So
it's bizarre, and it's totally desensitized to any headline. I mean, anything could happen in Europe right now. It feels like, and wheat just doesn't do anything.
Yeah, it's like generally any headline's bearish, no matter what it is. So,
like you talked about, wheat's relationship to other commodities like gold, like energies too. Like crude oil is down at like $56 right now. And if you take like crude oil to gold, which is a probably more popular pair to look at, gold is really, really expensive comparatively, or crude's cheap, one of the two. So like the only other time really in recent history is going to be, your 2020 timeframe when crude oil was, in the low 30s, negative at one point, to have this type of a ratio. So I don't know, is the market pricing in the chance that like we're going to go to recession because of all these trade wars and all this business is going to just stop flowing, and that's why gold's expensive to crude? I don't know what the market's trading. If we do start to see things liven up again, like we start inking some of these trade deals, I'd be probably on the positive side that the market may not really be pricing that in accordingly.
To be fair, too, I mean, looking at crude oil, you did have the OPEC announcement last week of increased production. So, I mean, I think there's some fundamental behind some of that. But to your point, Dustin, if you stayed cheap there,
Well, yeah, OPEC, right? They seem to be getting ahead of, Trump's agenda of, drill baby drill, more production. They're trying to offload their supply, maybe cut off America. Obviously at certain levels, certain areas like, like the oil sands, areas like that, when you get below certain thresholds, it doesn't make sense to produce. I don't think we're quite there yet. I think if you get into the 40s is where you start cutting off some of those higher cost producers of oil. But yeah, I mean, there's a whole lot of stuff going on here. And, talking about gold, I think there's a lot of uncertainty about what the world currency market looks like. Obviously the dollar's had a big break, but, what do all these, until these trade deals or until things are figured out, you have all these countries that are going to start acting in their best interest. What does that mean for currencies and relationships? And gold seems to be a safe haven that. And there's been a lot of smart investors that have talked about gold now for 6 or 12 months about being a good place to own.
Justin, Northwest Illinois, I mean, still pretty good planting pace. Guys been going pretty hard.
Yeah, going hard and then getting, an inch of rain. It's been, it's been really, really good. Yeah, I think not just Northwest Illinois, right? I think a lot of places are on a good pace now. You could say are we getting the cart ahead of the horse here on? All right, we're half planted. Let's say, thank God we made that crop. I think that's kind of the attitude here, and probably because we're forced to a little bit. Scared the market's going to go to $3 and we have to get sold, and so I think there's some of that going on too. It is great, but it's actually kind of normal. So if we didn't think we were going to get it planted, you would think we'd be at much higher prices. So taking some premium out. It's hard to say that we have premium at 447, but that's what's happening. So.
Oh, very good. Real quick, Riley, we got a couple minutes here. Funds continue to buy cattle. Looking at open interest in reports here this morning, and hog slaughter was better than expected last week. So I guess give us your thoughts as we kick off another week here.
Yeah, new all-time highs in cash market and cattle. I mean, it just keeps on going, and futures notched another new contract high. So, I think the heat kind of feels like it's kind of off the market right now to a large degree. Obviously, we're still seeing some overbought kind of technical aspects, but generally the market's been unbelievably strong in cash, and it just feels like this could potentially continue for the next several months until maybe something changes. We're still waiting to see if there's trade deals going on. We're still waiting for the semi-annual cattle inventory report in July. So there's all these things that could potentially happen. It's just, a long time to trade between now and then. So it just feels like we're seeing the investment community stay on the long side of the market, and it just keeps on grinding higher. So there really just hasn't been any real interruption in this. Like I said, I think there's definitely a lot of caution from those technical aspects, but generally speaking, it's more just kind of a wait and see, and let's see how long this can keep going. So still watching for some trade deals or some new kind of news to shake anything out. But generally speaking, I think there's an optimistic sense that we're going to get some deals done, down the road. So watching for things like Canada, Mexico, South Korea, Japan, anything out of those countries will probably be pretty market moving to the meats. So that's something to keep an eye out for. But the hog market, I mean, the cash market, product markets have been relatively flat pretty much all last week. So we're still seeing a lot of, I think you're seeing a decent chunk of just, hey, it's a good seasonal time frame to be long. Managed money added 9,000 contracts. Open interest was up 3,200 on Friday. So there's obviously, like, we're getting to those points on the futures where they're a lot more appealing from a producer standpoint. So I think you got guys trying to take advantage of that price movement. But generally, the seasonal optimism is here right now. We're coming into a better time frame, better demand time frame. So it's just more of the same, really, just waiting to see if there's any headline news to shake us out of it.
Very good. Appreciate the update. Also, one thing to note here, this afternoon, we will get crop progress and conditions, 3 o'clock Central. We'll take a look there and visit about that in tomorrow morning's War Room. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every morning that the markets are open at 8:15 Central on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a real good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.